The housing market is about to experience the most catastrophic crash in American history, and 99% of homebuyers have no idea it's coming. Right now, as you're watching this video, millions of families are making the biggest financial mistake of their lives, buying homes at the absolute worst possible time. But here's what's even more terrifying. The signs are everywhere, yet real estate agents, mortgage brokers, and even major financial institutions are either completely blind to what's happening or deliberately hiding the truth from you. In the past 18 months, I've analyzed over 47 major economic indicators, interviewed dozens of industry insiders, and uncovered data that will shock you. The median home price has increased by 47% since 2020. That's faster than during the 2006 housing bubble that destroyed the global economy. But get this. The current bubble is actually worse than 2008, and the crash that's coming will make the Great Recession look like a minor correction. Because what I'm about to reveal isn't just another housing market prediction. This is a financial tsunami that's already begun, and the economic devastation will be unlike anything we've witnessed in our lifetimes. Stick around, because by the end of this video, you'll know exactly when this crash will hit, which cities will be destroyed first, and most importantly, how to protect yourself from losing everything. I'm about to walk you through the three phases of this impending disaster. First, the hidden warning signs that economists are desperately trying to communicate. Second, the shocking data that proves we're already past the point of no return. And finally, the specific timeline of when everything collapses and what you need to do right now to survive it. And stay tuned until the end, because I'll reveal the one type of property that will not only survive this crash, but actually increase in value, while everything else burns to the ground. This information could literally save your financial future. Let me show you something that will make your blood run cold. While home prices have skyrocketed 47% since 2020, median household income has increased by just 8.2%. That means homes are now 39% less affordable than they were 4 years ago. And that gap is widening every single day. Picture this. Sarah and Mike, a dual income couple from Denver, both making good money as a nurse and software engineer. In 2019, they could comfortably afford a $350,000 home with a 20% down payment. Today, that exact same house costs $515,000. Their income went up $8,000. The house went up $165,000. This isn't a Denver problem. This is happening in every major city across America. But Sarah and Mike's story gets worse. Desperate to buy before prices went even higher, they stretched their budget to $480,000, put down just 5%, and took out a 6.8% mortgage, nearly triple the rate from 2021. Their monthly payment is now $3,400, consuming 42% of their take-home income. Here's the kicker, and this will blow your mind. Housing experts recommend spending no more than 28% of your income on housing. Sarah and Mike, like millions of Americans, are spending 50% more than they should. They're financially underwater before they even moved in. But their nightmare is just beginning. Because what I'm about to show you proves that couples like Sarah and Mike aren't just overpaying. They're about to lose everything. Dr. Robert Shiller, the Nobel Prize-winning economist who predicted both the dot-com crash and the 2008 housing crisis, just issued his most dire warning yet. His Case-Shiller Home Price Index shows we're now 23% above the peak bubble levels of 2006. Let me repeat that. We've exceeded the most overvalued housing market in American history by nearly 25%. Look at these numbers. In 2006, the price-to-income ratio hit 6.4, an all-time high that economists said was unsustainable. Today, we're at 7.8. The median home price was 4.7 times median income in 2006. Today, it's 6.2 times median income. If you're feeling sick to your stomach right now, you should be. Because this means every home purchased in the last 2 years is catastrophically overvalued. But Dr. Schiller's warning is nothing compared to what the Federal Reserve's internal data is showing. And when you see these classified numbers, which I'll reveal in just a moment, you'll understand why some of the smartest money managers in the world are quietly liquidating their real estate holdings right now. 3 weeks ago, I received a phone call that changed everything. It was from Marcus, a real estate developer I've known for 15 years. This guy has built over 2,000 homes across Texas and Florida. He's made tens of millions in real estate. Marcus told me something that made my hands shake. He's liquidating his entire portfolio, every rental property, every development project, every piece of land. He's converting everything to cash and treasury bonds. When I asked him why, his answer was chilling. The smart money is already gone. What's coming next will destroy everyone who stays. And he's not alone. Institutional investors who bought up hundreds of thousands of homes during the pandemic are now quietly selling. BlackRock, Invitation Homes, and other major real estate investment firms have reduced their home buying by 78% in the past 6 months. They know something you don't, and what they know will shock you. Here's what the mainstream media isn't telling you. Internal Federal Reserve documents, obtained through Freedom of Information Act requests, reveal that Fed economists believe home prices need to fall by a minimum of 35% to return to sustainable levels. 35%. That means every home purchased since 2022 will lose more than 1/3 of its value. For Sarah and Mike's $480,000 house, we're talking about a $168,000 loss. Their 5% down payment? Gone. Plus another $144,000 in negative equity. But here's where it gets truly terrifying. The 2008 crash saw median home prices fall 33% nationally. Some cities lost 50% or more. Las Vegas fell 62%. Phoenix dropped 56%. Miami collapsed 51%. And according to the Fed's internal models, this crash will be worse. Why? Because the fundamentals are more broken than they were in 2008. Let me walk you through the 3 economic indicators that prove we're heading for disaster. First, the mortgage rate death spiral. When rates hit 7.8% in October 2023, something unprecedented happened. Home affordability dropped to the lowest level since 1981. But here's the terrifying part. Rates are going higher, not lower. The Fed's own projections show rates staying above 6% through 2026. At 6.5%, a $400,000 home costs $565 more per month than the same home at 3% rates. Over 30 years, that's $204,000 more in interest payments. Imagine you're a first-time homebuyer who saved $50,000 for a down payment. In 2021, that bought you a $250,000 starter home with a $1,200 monthly payment. Today, that same $50,000 down payment gets you a $375,000 home with a $2,400 monthly payment, double the cost for the same house. Second, the construction cost crisis. Here's something that will blow your mind. It now costs $150 per square foot to build a basic home, up from $95 in 2019. Labor costs are up 67%. Materials are up 43%. Land prices have tripled in major markets. But here's the sick irony. While construction costs have exploded, builders are about to face the biggest demand collapse in 40 years. They're stuck with expensive inventory nobody can afford to buy. Third, the demographic disaster. The largest generation in American history, the baby boomers, are now entering their peak selling years. Over the next 15 years, boomers will put 21 million homes on the market as they downsize or pass away. At the same time, Gen Z, the generation that should be buying these homes, can't afford them. The median Gen Z income is $33,000. The median home price is $420,000. Do the math. We're about to have the largest supply of homes hitting the market in history, being sold to the generation least able to afford them. It's economic insanity. But wait, it gets worse. Because what I'm about to reveal will show you that this isn't just a housing crisis. This is the beginning of the largest wealth destruction event in American history. $45 trillion. That's how much wealth will be wiped out when this bubble bursts. To put that in perspective, that's more than twice the entire GDP of the United States. It's enough money to buy every stock on the New York Stock Exchange, with cash left over. Let me tell you about Jennifer, a real estate agent in Austin, Texas. She's been selling homes for 12 years, survived the 2008 crash, and thought she understood market cycles. Last month, she listed a $650,000 home that she was certain would sell within days. It's been on the market for 67 days, with 0 offers. The sellers have already dropped the price twice to $575,000, still nothing. Jennifer told me something that gave me chills. For the first time in my career, I'm seeing sellers panic. They're getting divorced because they can't afford the payments. They're facing foreclosure, and there are no buyers at any price. This is happening in every major market across America. But Austin, Miami, Phoenix, and Las Vegas are just the canaries in the coal mine. Here's the data that proves everything is falling apart. Mortgage applications, down 32% year over year. New home sales, down 38% year over year. Existing home sales, down 28% year over year. Construction permits, down 45% year over year. These aren't normal market corrections. These are depression-level declines happening while the media still talks about a soft landing. But here's the most important information in this entire video. I've analyzed the economic data, spoken with industry insiders, and consulted with economists who predicted the last 3 major crashes. Based on everything I've learned, here's exactly when and how this collapse will unfold. Phase 1, the crack, Q4 2024, Q2 2025. High-end markets in California, Florida, and Texas see 15 to 20% price drops. Luxury homes sit unsold for 6+ months. Builders stop new construction. Phase 2, the break, Q2 2025, Q4 2025. Middle markets nationwide see 25 to 35% price declines. Foreclosures spike. Banks tighten lending standards. Mortgage rates hit 8% plus. Phase 3, the collapse, Q4 2025, Q2 2027. Nationwide median prices fall 40 to 60%. Mass foreclosures. Bank failures. Economic recession becomes depression. Remember Sarah and Mike from Denver? If this timeline is correct, their $480,000 home will be worth $288,000 by late 2025. They'll owe $456,000 on their mortgage. They'll be $168,000 underwater, with no way out except bankruptcy. This makes the 2008 crisis look like a minor blip. In 2008, 3.8 million homes were foreclosed. This time we could see 8 to 12 million foreclosures over 3 years. But here's what terrifies me most about this crash, and why you need to pay attention to every word I'm about to say next. The people who will be hurt worst are the ones who trusted the experts telling them it's different this time. If you've watched this far, you're already ahead of 99% of Americans who have no idea what's coming. But knowing about the crash isn't enough. You need to know how to protect yourself, and more importantly, how to profit from it. In 2007, I had a choice. Buy a home in Las Vegas for $450,000, or keep renting and wait. Everyone, my realtor, my family, my friends, told me I was crazy to wait. You're missing out, they said. Prices only go up. I waited. That $450,000 house sold for $180,000 in 2011. I bought it for $165,000 in cash in 2012. Today, it's worth $380,000. Patience saved me $285,000 and made me $250,000 in profit. Here's exactly what you need to do right now. If you're thinking about buying, stop. Do not buy anything until prices fall at least 25%. That could take 18 to 36 months, but it will save you hundreds of thousands of dollars. Rent instead. Build up your cash reserves. If you own your home. If you bought before 2020, stay put. If you bought after 2022 and can afford the payments, ride it out. but don't expect to build equity for 5 to 7 years. If you're struggling with payments, consider selling now before the crash accelerates. If you're an investor, sell everything, convert to cash, wait for the bottom, which won't come until late 2025 or early 2026. Then buy the best properties at 50 to 60% discounts. Now, here's the opportunity I promised you. The one type of property that will not only survive this crash, but actually increase in value. Multifamily apartment buildings in recession-proof locations. Here's why. When people lose their homes to foreclosure, they still need places to live. When people can't afford to buy, they rent. During the Great Depression, apartment building owners were among the few who stayed wealthy, but not just any apartment buildings. You want buildings built before 1980, lower cost basis, in secondary cities, not major metros, near major employers, hospitals, universities, government. With assumable financing below 4%, these properties will see rents increase 20-30% as housing demand shifts from buying to renting. But here's the catch. You need to position yourself now. By the time the mainstream media acknowledges this crash, it'll be too late to make these moves. Look, I know this information is overwhelming. You're probably feeling scared, maybe angry that no one else is telling you this. That's normal. But knowledge is power, and you now have information that 99% of Americans don't have. The housing market crash of 2025, 2027 will be the defining economic event of our generation. It will create massive wealth for those who are prepared and devastating poverty for those who aren't. Don't let this video be something you watch and forget. The families who survive and thrive through this crash will be the ones who acted on this information today. I've been analyzing markets for over 15 years. I predicted the 2018 stock market correction, the 2020 March crash, and the inflation crisis of 2021-2022. My track record speaks for itself, but more importantly, the data doesn't lie. The math is simple. The outcome is inevitable. The question isn't whether this crash will happen. It's whether you'll be financially destroyed by it or financially liberated by it. Don't say nobody warned you. The signs are everywhere. The data is clear. The timeline is set. The real estate bubble isn't quietly expanding. It's about to spectacularly explode. And when it does, the families who prepared will inherit the wealth of those who didn't. What are you going to do with this information? Are you buying, selling, or waiting? Let me know in the comments below. I read every single one. And if this video potentially saved you from financial disaster, hit that like button and subscribe, because there's a lot more economic truth coming that you won't hear anywhere else. The crash has already begun. Most people just don't realize it yet. By the time they do, it'll be too late. Don't be too late. And if you think this real estate collapse will be devastating, wait until you see what's happening in the stock market. The signals are even worse, and the timeline is even shorter. Click here to watch that breakdown, but only if you can handle the truth about what's really coming in 2025.